Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in tonight's free video, I wanted to talk about the quote-unquote flight to quality. So everybody talks about when you get into these situations where stock indexes as a whole are selling off in a big way, and you're thinking, okay, where is the money going if it's coming out of stocks? One of the big products that most people seem to think is a big flight to quality is gold. Now, I've been covering this from several different videos from way back when, and my opinion on this still stands, and I'm going to use today's video to kind of make an argument for it. My stance on gold is that if we really were going to see some strength from this underlying, there's several things I'm going to talk about in this free video, so let's take a minute to dissect it. But when we first start off, and it's best shown if I didn't have the moving averages on this chart, but primarily pointing out the fact that you have a monthly squeeze that is fired short. I have worked with a squeeze long enough to know that there is just no reason to fight this. Maybe you do see little spurts of strength from gold. Maybe S&Ps have a big down day, whatever it may be, but it's taken me a long time to learn this lesson, and I always tell people that are trying to learn from myself or anything, it took me a long time to adapt to the ways that John trades and the things that he looks at, so try and save yourself some heartache by learning from the mistakes that I have made. Some of those mistakes that I have made are fighting monthly squeezes. So when I look back to this previous signal, here is kind of where you made the transition from momentum being above zero to being below zero. The problem with that is the way that the squeeze fired here. It essentially fired after the move was already over. So it's a little different as to what you're seeing here, but notice back here where the squeeze fired long, confirmed that signal, and added a good, almost doubled the value of gold. Well, now you've got the exact inverse of that signal. Not only is that very bearish to me, but I'm also looking at this previous major swing low to swing high. And it's another situation where if the market was really going to hold those previous lows, and you can see where it tried for the longest time. So I'm looking at this low made back in 2009 versus the all-time high, and then retracing back to the 618. So you can see where it held even here, and then in the most recent months has broken that. So that's one way that I step back and say all of that technically to me stands out as being a big bearish opportunity, or at the very least not a flight to quality. Another way I can try and make this point is by coming over to SPY. So we're looking at the index ETF for the spiders. Let's just think about the big 2 down days that we had. Essentially it was over the course of the weekend, where you had the 21st, which was an expiration Friday. That moved into the 24th, and that was the biggest flush down for the S&Ps that we've seen in some time. So when that type of move happens, then I want to come over to GLD, just the corresponding ETF, and say what happened during those days. Well, here's the move from the 21st to the 24th. The move into the 21st was a bit of a rally. Then the 24th stalled exactly at the 100-day moving average and failed from there. So if this is going to be a big flight to quality market on the day that the S&Ps were getting hammered, I would have expected to see more, residual strength from the precious metals. That did not happen. What did happen? Well, this is one of the things that I always try to be very clear on, because whenever you first start out and you're learning from someone, you want to say, what was something that caused you to shift your opinion? Because for essentially the majority of the year, I've been very adamant about being on the long side of the dollar and the short side of the euro. That is starting to be a little more indecisive to me, and I like to point that out and then point out the reasons why. Part of it too can be clearly seen if you come back to FXY. And notice this day. So here was the day from the 21st, and this was the move into the 24th. So when the S&Ps were getting hammered, gold really didn't do much of anything, but the euro was a huge rally. You flip that, and you can take a look at it through UUP. And then we do the exact same thing. Say from the 21st into the 24th, the dollar fell with stock indexes. So that's just putting me a little bit on the apprehensive. You also notice how UUP, and you can compare these in and out and go into the various products, but the general theme remains the same, that has broken below the 200-day moving average. It's rallied back up into that zone, and this is where we have to make our big decision. So I wanted to use today's free video to point out that gold for me is still not a flight to quality. Where I have been very bullish on the dollar, I'm having to give that a back seat in relation to what we've seen lately, and these are the things that I'm going to be following in the coming days. So if the S&Ps are going to have a big flush, I would be looking to buy the euro. Not really going to short the dollar. I would more just play it through the euro, and then really just not looking for any type of play at all in gold, and hopefully that keeps you safe. I'm trying to buy it as a big flight to quality product. So I hope that helps, gives you my take on these big key markets, and we will see you guys at the next free video.